Hey y'all, how's it going today? This is Ryan with TrendLizard.com. Hope you're having a wonderful day. Hope your stock market portfolio is killing it. Sorry it took me a few weeks to post another video. Life gets busy when it starts getting warm outside, as you might understand. But I did want to update you on some things today. We're going to do a few different things. First, we're going to update what's going on with the stock market. It's been super bullish. We warned you in December that it was a counter trend decline and that the market was poised to reverse higher, and boy has it. It's been an amazing start to the 2019 year. The market's gone nuts. It's actually retraced all of the declines in October, November, and December of 2018, and now we're testing the highs. And this is just looking like a super bullish runaway type market. So I just want to do a quick update on the overall market, show you what's going on there. But the real focus of this video is I want to just kind of do a roundup of some stocks out there that are either making news or just are hot stocks in general. That should be on your radar. And we're going to look at stocks that look like good buying opportunities. And we're also going to look at some that are making headlines that you probably want to stay away from. So we're going to dive into some charts and just show you kind of the most important things only. Just focus on the facts and tell you what is coming in the future so that you can load your portfolio with just the best offerings that the market has for you. So let's dive in and see what the charts have to say. Here we go. All right, so to get us started here, let's take a look at what's going on the S&P 500, which is our best representation of the stock market as a whole. So this is what's happened since December's low was recorded. If you remember, the market got absolutely destroyed in December. It also did in October. It was a pretty bleak time and kind of scary as people wondered if the bull market had ended. Obviously, things have changed in a major way since then. We had a ton of warning signs that this was going to be a counter trend pullback and that a major low was going to occur and that price was going to turn higher. As you can see, it has. It has gone absolutely ballistic to the upside since December 26th, the day after Christmas. Happy holidays and all that stuff. And you can see what's happened since then. It's just been on a tear. There have been two decent pullbacks over that time. This one here in late December, early January, and this one in early March. Neither one of those was anything of any great size. It was 3.1% and 3.4%. For the most part, this guy has been trucking, just unabated, a very one-directional move, to the point that the market has become super overextended. I mean, we're seeing a ton of things that could warn of a high, things that could indicate that a larger pullback is going to happen. But those things have been in place since February, and this market has not cared. It has continued to tick higher, and basically that's a bullish thing. I mean, if there was any excuse for the market to pull back, it just doesn't seem to care, and it just keeps trucking. Now, the difficult part is this makes it difficult from a technical perspective. If you're looking at technical indicators like MACD, stochastics, if you're looking at the breadth behind the move, if you're looking at pretty much anything that a technical analysis system would be based on, it's really hard to get an idea when this up leg is going to end and when you're going to get any type of larger pullback. So that's not ideal. Obviously, we prefer that the market follow the technicals and that the technicals give us good insight into what's happening in the market. But we need to adapt. We need to understand what this market is all about so that we can participate in a move like this, because this move, something similar to this, has happened before. I looked at the past 30 years of stock market action to try to find if there were similar periods where the market was just so one-directional. And there were four. There were four periods over the last 30 years where the market avoided anything greater than a 3.3% pullback for an extended period of time like we're seeing here. I think this has been like 17 weeks or something like that. And it led me to a couple years in particular. So let's take a look. This here is the 1995 year. Basically, there was a pullback here in July. This, I think, was a little bit greater than 3.4%. But for the rest of the entire year, you didn't see a large pullback. Now, if you looked at the technical indicators during this period of time, it's not going to be super insightful. You're going to be getting false sell signals very frequently because this is a very overextended market. At the same time, it's one that you wouldn't want to miss because it is so strong and it just keeps on trucking. We saw a very similar thing in 2017 where the market went the entire year without pulling back more than 3%. So again, it's not an ideal situation, but it kind of puts you in a spot where you just have to be passively bullish. I mean, you have to ignore the technical indicators and expect more strength ahead until there is something that happens to indicate that something different's happening, that a larger pullback is going to occur. Like I said, we haven't seen anything greater than a 3% pullback for a long time, for about 17 weeks, or I guess 3.4%. So if you get a pullback of that size, it's probably a good indication that something's changing and you're going to get a larger counter trend pullback. Until then, you just got to be bullish and put the blinders on and expect higher prices. So that's kind of what we're looking at the overall market. Let's dive into the beef of this video. We're going to go through a handful of stocks here that have some interesting things going on that I think you'd want to take a look at. We're going to take a look at Amazon, Boeing, Bank of America, Canopy Growth, GE, and Square. So let's get started. Here's a look at Amazon.com. We've done videos on this guy before. It's bullish. It's probably later in this 5-wave advance here that you can see started back in 2016, but it's not over yet, and there's the potential for significant growth in the meantime. So let's go ahead and zoom in here. Here's what's happened over the past several months on Amazon, and it's all bullish stuff. You see this big breakdown that happened in late 2018 is a very clear 3-wave counter trend move. We know counter trend moves play out in 3 waves. This is a 3-wave move. The only thing this can possibly mean is that it's a counter trend move and that Amazon is going to continue higher. So Amazon gave us a really nice up leg in early 2019, pulled back for a couple months. Now it's breaking out again. Now this looks bullish. It needs to stay above 1690 at all times to stay that way. If it were to move below 1690, you can see that this up leg would be a 3-wave move as well, and that would just indicate that a larger counter trend pullback is going to happen. I don't think that's what's going to happen. I think Amazon is going to continue higher from here, but obviously we don't want to fly blind, so your key level is at 1690. This is where you'd put your stop level if you're trading Amazon. Let's move on here. Let's take a look at Boeing, and this guy has definitely been in the news with the crashes with the 737 MAX. We took a look at it the very day that the first crash happened, and the big dent that occurred on the stock price, and we showed you that it looked like a big 5-wave advance might have completed off the 2016 low, and if so, that sets up a larger pullback, and that would point down to this yellow support area for Boeing before it finds any relief, and so that's what we were looking at. So let's go ahead and zoom in a little bit on Boeing, and basically after that big sharp decline that happened in early March, it's found some support. You can see it's trying to find some support in this yellow area, but the problem is it's moving sideways. I mean, we're not seeing any kind of dynamic recovery that's happening here on Boeing, and that should be a concern. To me, it looks like the middle of a larger counter trend pullback, so I think Boeing is going to head lower just based on what's happened off of March's low. This is counter trend action. This looks trendy. That tells me this is probably wave A, this is wave B, and you're going to get another C wave down. That's probably going to break through any kind of support on the short-term time frame and find its way lower. Do not trade Boeing here. This does not look good. I would stay away from Boeing. Let's get to something that does look good. This is Bank of America. I've only got one chart for you here because it's the only one that matters. We've done videos on Bank of America before as well. You can see that the large pullback that happened in 2018 is a choppy counter trend mess. Granted, it did take a chunk of the value of Bank of America before it was over, lost like 33%, but since then, everything has been absolutely bullish. You get a really trendy 5-wave advance in early 2019. You get a very clear 3-wave counter trend pullback. It found support in our yellow support area, and it's turned back up to set a new high. So all things are pointing higher for Bank of America. We've said it before, I'll say it again. This is a good buying opportunity, and you should consider owning it for your portfolio. Bank of America needs to stay above 28 in the short term to indicate that this counter trend pullback is over. So if it moved below that area, we would expect it to test this low again and then take off, but more likely it's going to just take off from here. So again, if you're in a very short-term position, you'd want your stop at 28, but overall, Bank of America looks absolutely bullish. Let's move on to Canopy Growth here. This guy's pretty interesting. We did a video right around here saying that we were expecting a larger counter trend pullback, and we've certainly got it. Canopy Growth remains bullish, as does Aurora Cannabis. But you can see the pace of action here. You can see the difference. You can see what happened first back here. I mean, you see this is a counter trend move here, a nice 3-wave move. And then you see this super sharp move. This is the stuff of trends. I mean, this is the stuff you want to own. And then you see the difference in the pace of action on the way down here. This is a counter trend move. It's finally tested our yellow support area. As long as it stays above 35, this guy is going to be poised to really take off to the upside. Not only because of this trendy up move and counter trend pullback, but because this is also a counter trend move. So everything you're seeing on this chart is one of two things, either trendy upside movement or counter trend downside movement. Either way, it's bullish and it points higher. So I think this is another one you can consider owning. If you own it, continue to. If you don't yet, look for some strength. And once you get some strength, I would buy in. So let's move on to GE. GE has been absolutely massacred lately. Well, I guess over the past couple years anyway, it absolutely tanked, went down from 30 to about 6 and change, and then has given us a large pop since then. And this is an interesting move. Now, I can't confirm one way or the other whether a major low has occurred on GE, but it sure looks like this is the start of a larger recovery and that you're going to get higher prices. And I'll show you why. If we look at this advance in 2019, what you're getting is you got a nice 5-wave move to the upside, suggesting that maybe a new trend on some time frame has begun. Since then, you've had a nice 3-wave counter trend pullback. Now, it's still pretty close to the low. This isn't necessarily over yet. So it needs to stay above about 840. And if it can do that, if you see any kind of strength emerge on GE, it's going to look like the start of another sizable up move that's going to be worth trading for sure. I mean, you see the value that was acquired here in early 2019, 650 up to 11. So you're talking 450, you're talking like 65, 70%. And you could get another similar up leg once this counter trend pullback ends, as long as it stays above 840. Let's look at one more. This is Square. It's almost a similar situation as the one we just looked at, but this is all that matters to you. You're looking at Square. It's been on an absolute tear for a long time. It got all the way up to 100 and then cut itself in half in late 2018. The thing is, this was a counter trend move. This is a 3-wave move. Again, we know 3-wave moves are counter trend moves. That can only mean the trend is still up. And price bears that out from there. You can see you get a nice 5-wave advance in early 2019. Some type of counter trend pullback has begun. As long as this stays above 62 on any larger pullback from here, it is going to look like a buying opportunity once you see some strength emerge from there. All right, y'all. I hope that was helpful. Give you some insight into what is happening with the overall market and a handful of stocks out there that are pretty interesting. This is what we do every day. We apply Elliott wave theory to the stock market in all major segments. We show you how to make money in every corner of the market while keeping your risk super low every step of the way. So please come visit us at TrendLizard.com. Please subscribe to this YouTube channel. Support the good cause here, and have a great day. We'll talk to you soon. Bye.